And this is actually going to be a fundamental shift that's going to happen over the next 3 or 4 years. So it will create the opportunity for some smaller producers to more easily come to market.
How does a junior company go through a process of establishing itself, given in a world of giants?
Yes.
You mentioned the super huge companies with big balance sheets and access to cash. How does a small company generally get into the market and establish itself?
Yeah, so one of the opportunities, and this is actually going to be a fundamental shift that's going to happen over the next 3 or 4 years. Nickel historically was an oligopoly. Nickel processing, so downstream processing, was an oligopoly, controlled by Inco, Falconbridge, now Vale, Norilsk, Glencore, and so the problem for small miners was you could build your mine, but then you had to sell your concentrate to somebody, and unlike copper and zinc, where there's benchmark terms, they're negotiated very competitively every year. There was some fairly take it or leave it pricing, which transferred a significant amount of the value to the smelter refiner and away from the miner. So mining is hard, but when you end up having to give up a fairly significant share of that value to
just when you've done the hard bit, you got it out of the ground. No one will process it unless you pay through the nose.
Exactly.
Wow.
Right. So
okay, got it.
What's now going to be changing in the nickel space? We're not there now, but over the next 2 to 3 years, is the Chinese and every other semi-finished, semi-processed material goes ahead and builds way too much capacity to meet the market demand.
Right.
And then they bid up the price of the feed to basically a break-even number. So with nickel sulfate for EVs, which are again a massive amount of capacity is required in Asia, they will build capacity to take various nickel intermediates and then process them into the products that the EV market is going to need. Right. So it's opening up the door now for smaller sulfide mines to be able to come into production and have competitive pricing for their product in 2, 3, 4 years time. So it will create the opportunity for some smaller producers to more easily come to market.
Right.
In terms of laterite ore suppliers, again, China is going to need ore supplies. Because Indonesia is now not going to be supplying it. So again, there's not a lot of places where you find laterite ore in coastal deposits that you can ship out of the country, but there are some places.
I think there's a space for juniors in this market. Do you think mining nickel in the past is advantageous, or do you think nickel is a sort of relatively easy type of commodity to get into? If you've mined gold, you've mined silver, it's all the same, isn't it?
Yeah, I mean, generally mining is like it's not. There's specifics to a particular metal that you need to know, but bottom line, the technologies, processes that are used are relative, are similar. So if you've run a copper mine, you should be able to run an underground copper mine. You should be able to run an underground, nickel operation.
Okay, because we talked to some CEOs of commodities and they say, well, if you've never mined in this space, you don't know what you don't know.
Right.
Okay. But nickels is less complicated than others, is that what you're saying?
Yeah, I would say it's consistent with the other base metals. There are again, and each metal does have its specifics. That you do need to know, but again, you can find the expertise and put it into place.
Beautiful. So there's bulk plays and there's slightly higher grade plays. Okay, and they each have different challenges.
Yes.
Okay, so bulk for me is, would that be below 1%, or is it below
no, it would be below 0.5%.
0.5%. Okay, so that would be described as bulk. I mean, what are the higher grade?
Higher grades would be sort of 3 or 4% nickel. You get some massive sulfide nickel, smaller plays in Western Australia. And then you get sort of another sort of bucket, sort of between 1% and 3%, that you could mine underground on a larger scale.
Okay.
Again, the biggest challenge with nickel is there's just not many new nickel discoveries.
Right.
We have, if you look at the project pipeline of most metals, there's literally hundreds of gold projects. There are dozens and dozens of copper projects. In the nickel space, there really are a very limited number of projects, and there's been a very, very limited number of new discoveries. So that's the thing. I think when investors start to look at it, there aren't a big universe of nickel opportunities with which to invest in.
I have to say, it's very confusing for investors at the moment, because almost every company that we speak to is pitching the EV revolution, the battery revolution. It's going to change our fortunes, and therefore invest in us, buy our shares, whatever the pitch is. Some are more believable than others. We've had, again, some people sort of talks about the timing of all of these things. So, I think with I can't remember the name of those. A couple of CEOs go, look, the reality is this thing's a couple of years away. So companies between now and a couple of years away, realistically not going to be impacted by the EV revolution or pricing in the market, etc. Or demand in the market at the moment. But what they will say is like, okay, get in cheap. Our stock is cheap today, so get in ahead of the crowd. But how do you pick winners? What should we be looking for? Just specific to nickel, I mean, what are the sorts of things that we should be avoiding?
Right. I think the things to focus on, are because again, most nickel projects are expensive, right? So Vale's new underground mine in Voisey's Bay is $1.5 billion.
Right.
Glencore's new mine, I think, is $800 million or $1 billion. So most nickel projects are going to require $1 billion or so of capex. To be able to fund that kind of investment, you need large companies to be interested. So I think that's one of the things to look at is is the scale of the resource that this company has got going to be attractive to one of the majors who say, I want to grow in the battery material space, and I can do that through nickel. Again, attracting investment from the EV companies, again, they're not going to fund 62 little mines to come into production. They want larger, long life, large scale assets that can hopefully grow with them as they grow their businesses.
So what is large scale? If you said right, the resource number, mineable resource number is this.
Yeah. So nickel is a 2.4 million ton market. And if you can produce 20 to 30,000 tons a day, that's a decent size mining operation. So roughly kind of 1% of global supply. If you're so I'd say that's one class of investment.
Yeah.
I think the other opportunity again would be smaller scale, that it's going to produce a concentrate,
Right.
And again there I think just make sure that they're using realistic operating cost assumptions and realistic capital cost assumptions in terms of if they're restarting a small scale mine. That's because that's one of the there are some of those opportunities out there today, and some of them are good and are good at a good price. They'll be able to come to market relatively quickly and participate in the cycle as the nickel market rebounds.
Right.
When RNC, we did the joint venture with Waterton, the cash pool that we did was to sell down part of Dumont to be able to pick up some of these smaller scale restart opportunities, so you could participate in the cycle more quickly.
Okay.
As opposed to having to build a big project for 2 years.
Right.
So I would say it's the world scale asset, the sort of small scale restart or small scale resource that you can bring into production relatively quickly and cheaply, but again, make sure they've got realistic operating capital cost numbers.